Welcome back to Sofa Academics, where I teach you guys how to budget, save, and invest. Go to sofaacademics.com to build generational wealth, free up debt. Let's get straight into the video. As we take a look at the Fear and Greed Index, the market is currently at 61, currently stated at greed, and extreme fear would be 100, and 0 would be extreme fear. Based off this scale, the market has more bullish potential to go to the upside. I like how the market's been in this nice little correction these last 2 days. But overall, this past week, the market's looking very strong. And the past week, the market's still at 59 with a greed. And the past month, the market's still in greed with a 66 out of 100. 1 year, we're back to neutral. That's a good sign for us investors. Last time we were in fear this past year. So now, market's pushing up to the upside. And we got a little bit more upside to go as NASDAQ still has to reach its all-time high past 22,000. As we take a look at Bitcoin is having a down week these past few days. Bitcoin had a strong momentum towards the beginning of the week, with Monday, Tuesday, and Wednesday being very strong for Bitcoin, and we see Thursday and Wednesday is really down for the week, with Bitcoin being down past 106,000. It's down 2,200 today with 2%, and overall Bitcoin is going to have a good strong month for June, and July is going to be a good momentum towards this summer rally. Bitcoin still has a huge way to go. We see corporations like GameStop strategy still buying around this 106,000 to 110,000 range. Bitcoin is going to expect it to hit about 150,000 this year. So if we buy now, we can get at least 45 to 50% return off investment, dollar cost averaging at this price right here. Bitcoin is not too high for you to still sell it for higher. So let's keep an eye on Bitcoin. Ethereum's been outpacing Bitcoin, staying strong around this $2,500 level to $2,800 level. And Ethereum's just always breaking out to new highs. So we're seeing higher lows and higher highs in these uptrend right here. We see one May 18th. We see one May 25th. We've seen another one June 6th. So we're just breaking out towards new highs. And this is a great sign for Ethereum, as it's very, very volatile after the short squeeze that happened when price broke down to a year low to about 1,300 during April 7th. And then we continue buying Ethereum right now. We got the opportunity to times 100% what we put in. So if we buy right now between 2,700 to 2,600, once Ethereum passes $5,000 this year, we get 100% return on investment and double what we put in, as the layer 2 foundation gets more efficient with decentralized apps. Crypto stocks have been very choppy these past few months. Personally, I haven't been touching them, or I just been keeping an eye on the list until we get a new breakout past Bitcoin, past 112,000. But for right now, they're going to stay in consolidation in these next few days. And I don't like to really buy or trade whenever there's a real choppy like MSTR has been in the last 2 weeks, because price doesn't go anywhere. It's been in this correction, but we're not breaking out past new highs. If we do get a new high, it quickly goes back down. So that's a good sign if you are trying to dollar cost average into MSTR, but beware of a huge pump towards the downside for MSTR before we go back past $400 for MSTR. Beware for a huge leg towards the downside. Same as Coinbase. Coinbase has been very choppy. We haven't really got it past the $270 range. It's been staying in that $270 to $245 range. Beware of a breakout towards the downside of Coinbase to about $230 to $225 before we push back up to $300 for Coinbase. This stock right here has been very choppy. We got it down at least $10 today, which is a great sign for us people who ready to dollar cost average into Coinbase to push past $400 this year. Tesla has had a phenomenal week. Tesla's one I had my top radar this week. I've been trading on Monday and Tuesday and Wednesday. Today we had a down day for Tesla. We seen that it went down, had this pin bar handle going down to about $318, and it opened about $330, and we seen it continue having this downtrend, as we seen it sell off last week, where Trump and Elon had this beef, but the momentum really quickly rebounded from that news. So that's a great sign for Tesla and its investors. We want to keep an eye on this next event though. The Robotaxi event starting on June 22nd. It was supposed to be this week, but they pushed it into June 22nd so they can get more momentum and they can really get more capital built up for investors and really get some more speculation on how that event's going to go. But this is going to be a great sign for us investors. This Robotaxi event is going to be, no matter what happens, it's going to pump the stock up based off these technicals right here. Tesla can drop down below to 280 again, so it can finish off this double bottom. But that chances of that happening is very, very less likely, just because how we seen Tesla recover in this past week. If we zoom out to the time frame and go to the 5-year time frame, we see that Tesla on this week's candlestick, this is showing bullish engulfing. So based off how this stock dropped last week on Monday 2nd, following that week, well, this week on June 9th, we seen Tesla opened up higher than where it closed last week. So now we seen it went from 277 nearest lowest, where this week's lowest was 285, and that's a great sign. If you put these two candlesticks together and they merge, this is the type of candlestick we'll see on the all-time time frame. This is a hammer candlestick, guys. So this right here is meaning this stock is in a bullish mode. And whenever we see a hammer candlestick, it just means that price is going towards its highs. So it opened towards the bottom and then it ended up closing towards the top. And this is a consistent sign of bullish engulfing. Prices are going towards its highs. And if Tesla can continue this move towards the rest of the month and it closes at this hammer candlestick, even finish off in the green, this will be a great sign going into July. So based off right now with the events of Tesla and all this controversy with Trump and Elon, it's just building more and more controversy for Tesla stock to increase its volatility so it can break out past $400 in the next month. Another stock to keep on your radar is SMCI. SMCI has been very quiet. In February, we pushed up to $66 and we came back down to about $38 to $27 range. And now SMCI has been staying very, very quiet on this bullish flag that it's taken forever for it to finish. But once SMCI finishes in bottoming out and finishing the formation of the candlesticks, it's very choppy at first and it takes time for it to finish the pattern it's trying to do on the charts. But once it's finished and it's in the pattern for it to break out, there's no stopping SMCI. So you want to be prepared for the trend of SMCI and load up on contracts and dollar cost average into SMCI before it takes off, so you can join in on the momentum and start printing and take it to the bank. So in order for SMCI to break out, we need a huge move past $47. So in the next following weeks, based off what this all-time candlestick is looking like for every week, this 5-year time frame, this past 4 weeks we've seen SMCI drop down in consolidation between this $39 to $47 range, right? So in order for it to finish this wedge / bullish flag, we need one candlestick for the next following week or next 2 weeks breaking big past this $50 range. And once we do that, we want to load up on contracts so we can push past $66. And SMCI is one of my favorite ones just because the option contracts aren't too expensive. So we can look for one that expires the next following month for July 18th for about $350 to $380, and then we can get multiple contracts at that. If we get 10 contracts at that, that's $3,800. And then once SMCI pushes back to $66, now each contract is going to be worth $700 to $1,000. So now you bought 10. That's an easy 10 grand for you for just investing $3,500 to $3,800. So this is how I like to make good estimated high profitable trades with options, by getting companies like SMCI that are very low and they've been in consolidation and finishing its pattern candlestick on a yearly time frame or the 5-year time frame or even the monthly time frame. And then based off what the candlesticks are doing and showing, if they're showing bullish engulfing candlesticks like how this one is, I go ahead and place my contracts early and make sure that I have a good amount of time for them to be in the money. So if we can look at the all-time for SMCI, we look at how it's doing every month, we're seeing that since November 2024, SMCI has been in the uptrend. And every time we retest, we get a higher low. So once we break out of this range, past $66, we're going to have a new support of $50. So we're not going to go below probably $39 to $40 after this huge breakout past 50 again. And this is the one that you guys need to keep an eye on, especially this month to get in, and you got to hold the contract for the next 2 months after earnings till August. One of my easy plays that you can get into early and you make some easy passive income is TQQQ Pro Shares. Right here, this is what whenever you have an ETF that it's actually pretty risky, but not too risky just because it's an ETF of all the technology stocks that are volatile, and they put it in an ETF for you guys. So this is a great one that gives you nice growth and profitability just off just owning the stock and actually having options on it too. So if we can buy right now between a $75 call and we can hold it past $100, we got at least $21 to $25 difference to get on this due to it still being down about 22%. And then we continue loading up right here in these contracts based off what the chart is telling us. Ever since April, we have these huge candlesticks consistently starting from April, May, and now June. We got this uptrend going back in this correction. So this stock is one of my favorites, so we can continue loading up on so we can get some nice passive income. TQQ requires more patience compared to Tesla and SMCI. You get a nice $1 to $3 gains a day. So if you want even more than that, you have to hold the contract or hold the position even longer. But people that have patience and SOFR academics, this is not a problem for them. We know that wealth isn't built overnight. It's through month to month or practicing buying the dips in a long time, in a long duration of time over time. So continue looking at TQQ. I'll suggest that if you get into TQQ, make sure that you are looking at the yearly time frame. So let's look at the yearly time frame. If we know how NASDAQ is moving, basically the index of the technology stocks, which is pretty much the same chart for TQQ, but a little bit more choppy and less risky compared to the index. If we can see that index of NASDAQ is doing very good and it's in the green, then we can go ahead and make a nice profitability that TQQ is going to be doing the same thing just because it goes off the same charts. So if you know one chart, you can profit from this one. You just have way more leverage with it being $77 compared to $21,000 for NASDAQ, and it'd be way more volatile. This is right here going to get you some nice profits on a green day if the technology sector is doing really good. And another one of my long-term plays for options and dollar cost averaging into shares is AMD. AMD is still currently at this $118 to $125 range. I mean, AMD is giving us time for us to be patient so we can load up, so we can break out past our threshold of capital that we made this year. So as we start loading up into AMD, we want to pay attention to how long it's been down. AMD's been down 426 days and it's down 48% and it's down $109. So based off how much capital and risk that we're trying to get into, if we're options traders, we want to make sure we got multiple contract sleeps of AMD in our portfolio expiring in 2026 of January or June 2026, and we want to have about 5 to 10 of them if we want to make a good $100,000 return. And if we want to make this a simple 10K, we just need to get one contract, guys. If we wanted to just pay off a simple credit card, a 10K balance, we just need to put in about $2,500 to $3,000 into AMD contract that expires between June 2026 and January 2026, and hold it. You just leave it in your portfolio. Don't even pay attention to it too much. Let it start performing once AI and its new AI semiconductor servers start playing its effect and starts demanding from sales. We're going to continue loading and getting passive income while we sleep with AMD. This is what I've been doing, guys, for these last 6 months, and I have proven that this will work for you too as well. This strategy I done research on for you guys based off where AMD's right now. This hammer candlestick that we seen in April, AMD is taking off from there. We are not going below $100. So the support levels that we see on AMD every day in the intradays, or these nice corrections that we see on the lower time frame, these are your buy opportunities. So we see one May 23rd, we see one May 30th, we see one every week. AMD has a nice correction where it sells off. We're actually at one right now. So if we continue looking at AMD and buying in these key areas, whether it's options contracts or it's dollar cost average, this parabolical range that we see in AMD, we're going to be down, guys. We're going to be probably losing a lot of money in the moment. But us long-term investors aren't worried about that, because the day that AMD breaks out past 150 because of earnings report, or get some good news because it partnered up with a new AI company, or just tremendous sales off its servers and graphics cards, whatever it is that makes the stock break out, we're going to be good because we were practicing buying in the correction while everyone else was selling, or everyone else was just paying attention to it and not buying the stock. But we bought contracts and dollar cost average into it, and now we got the fruits of it. We got a huge amount of return. We're up 80%. We got 500% from our contracts. So this is why I like talking about AMD every video, just because it's giving us time for us to build up in this parabolical range. And every time there's a parabolical range, we got a time where we're down, and then we got a time where it's choppy. We're not too high, we're not too low, and we just got to keep waiting. And that wait can be 426 days like AMD. But once that parabolical range of the downtrend and the range consolidation is over, boom, we got that breakout, guys. We got this candlestick like we seen October 2025. You know what I'm saying? We seen in September 2015 at AMD. And then we got consistent days of green every month, and now we got huge returns. So let's be patient on AMD, guys, and this is going to be your go-to if you want to get at depth, whatever it is that you need. Any financial goals, you don't even have to think too hard. Just get up some contracts on AMD, dollar cost average into this stock, and then you'll be straight. No worries for you to overthink your financial situation. Just continue working hard, putting money aside to dollar cost average. Make sure you're saving the budget and buy AMD. I'm going to give you guys another last play before we leave, and then make sure that you pay attention to this one. This is Wix. Wix is currently down at $154. We've seen Wix between $300 in 2021, about $350. Well, in January 2025, we've seen Wix at $246, and we got it back down to 150 that fast. So this is a great sign. Every time we see Wix in a correction, we're gonna know it's gonna pass its all-time high like it did in 2021, right? So this is a sign for us investors to buy while it's in this correction. And Wix is showing us that this is a great area for buyers and investors, just because it's way lower than $250. So we got the opportunity to get in right now. We can make that easy 10K per contract, like I was talking about AMD. And Wix takes time as well. You know, it's up between $4 a day, $5 a day, and maybe $8 on a good bullish day. But the demand for Wix and this platform is going to show us that AI and technology is just going to get more developed as websites are on the internet. So I love this stock. It's very volatile, and we can continue loading up right here for contracts that cost about $3,000 to $4,000 per contract, and we can make a simple 100% return off investment. Since y'all made it this far, I'm gonna head and throw y'all some cheesecake. I'm gonna give you guys the last play of the day. Nikes for my long-term investors, my investors that love apparel and they're not too worried about how they look, but they rather get some nice apparel by just owning the stock. This right here is a life flashing opportunity for investors to get into the stock. It's currently at $62 a share. We see Nike down for about 1,000 days, and it was up 179 in 2021. But we know every 3.5 years, there's different cycles in the market. So it was in a bull rally when we hit 178, which was its all-time high. Well, after 3.5 years, there has to be a bear market. So these next 3 years, we've seen Nike fall down tremendously, crash. So now the best time for you to build wealth is whenever the stock market crash. That's when new people build wealth and there's new money flowing around. So now we're in the area of key value where Nike is trying to come back from being in this low correction, in this crash, and pick up past 178. Now we know Nike has dividends for its investors, and its investors get about 40 cents a share for owning Nike stock. So if they buy $60 and own one share, they get a 40-cent dividend return every quarter. And now that's a great way for you to start building and start learning on how you can make passive income in the stock market. So once Nike is in this range and you keep dollar cost averaging, when it goes back to 178, you're not going on from 168 to 178 per share. You're actually getting dividends with that too. So meaning you're getting money from the stock going up and you're getting money from the dividends. And that, right, friend, is the best type of income you can make. Better than real estate, better than crypto, better than any type of asset that you can think of. So this is a nice opportunity for people who like to play the long game, and they can also be a little bit more aggressive with it too. Not only getting those type of two incomes, but also making sure that you got some contracts with it too, with my options plays. So right here, you can make a 10-band contract and hold it for the next 2 years with some leaps, just because option contracts with Nike is not too expensive, but you got to make sure you have some capital aside for you to make more multiple contracts. So once you are hitting off those dividends and those shares and they start accumulating to about 20% to 30% returns, you can sell some of that and maybe buy you a few contracts. So that way you can compound your interest and your leverage of investment over time. And that's going to cap it off for today's video. Make sure you guys leave a like, you comment below your favorite part of the video, share it with somebody that you want to see you doing better and you care about and you truly love. Make sure you go to Sofa Academics and copy the latest Bitcoin to the Moon t-shirts, and make sure you check out our latest book, You're Already Rich. And this is books that's going to help you become the best version of yourself. That's going to be it with today's video. I'll see you guys in the next one. We out.